Yet another factor which affects the supply of goods or services is the cost of production. Yes, cost of production is another factor which affects supply, or I would say it's another factor, another determinant which affects supply. Cost of production means the expenses incurred while producing a good. So, what do I understand? Cost of production is basically factor pricing. The expenses incurred on factors of production like land, labor, raw material, machineries, and other factor of productions which are involved in producing the goods and services and commodities. So, if any of this factor becomes costlier, or I would say the factor pricing increases or production cost increases, then naturally it hampers the overall liquidity and hence the overall production level reduces. Since overall production level reduces, it naturally affects the supply. So, cost of production increases, overall production level decreases, which eventually reduces the supply. On the contrary, if their prices go down, then naturally what happens with the same liquidity, I can produce more. Hence, my supply in the market increases because supply is dependent on production. Higher the production, higher will be the supply. Lesser the production, lesser will be the supply. So, as cost of production increases, the factor of production prices, any of the factors production prices, let's say land, machinery, raw material, or let's say labor's prices have increased, which affects my overall production level. So if they increases, my production level decreases because I have limited fund. So as production level decreases, my natural supply also decreases. And the vice versa is also true. If the cost of production decreases, my production level increases because I have now more liquidity, more funds, so that I can produce more. As my production increases, naturally, I see an increase in the supply of the commodity. So in a nutshell summary, if higher the cost of production, lesser will be the supply of commodities. Lesser the cost of production, higher will be the supply of commodities. I'll explain this with a nice example. Let's say I make chairs. So while making chairs, I require lots of raw material, starting with wood, labor, machineries. So in 5,000 rupees, what do? I can make 100 chairs. Now let's say what happens if the price of any factor of production, let's say price of a labor increased. Now, earlier I used to make one chair at 50 rupees. Now I make one chair at 70 rupees. So naturally, when earlier I used to make in 5,000 rupees 100 chairs, now I'll not able to make those 100 chairs. I'll produce less because my funds are to an extent limited. So looking at this increasing in price of production, I would say I would produce less. Since I produce less, automatically I'll supply for the lesser amount of quantity. So in this case, when the price goes from 50 rupees a chair to 70 rupees a chair, what I'll do, I'll produce less and my quantity production will be around 70 units, let's say. So what do you understand? As the cost of production increases, the supply decreases. As the cost of production decreases, supply increases.